Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 11th of December. I'm Daniel Lam, your host for the podcast. One of my favorite chess quotes was, quote-unquote, long calculations, wrong calculations, by the Danish multi-times world championship candidate Ben Larsen. Former world champion Garry Kasparov also wrote that, quote-unquote, like the weather person's forecast, the further ahead you look, the more likely it is you will miscalculate. So these quotes are quite relevant to Hong Kong China equities. The market is so sensitive to news headlines on the government's policies front. So recall a week ago, we spoke about how volatility has subsided in the Hang Seng Index when investors are turning cautious due to the threats of tariffs. However, the unexpectedly sharp move in the markets this Monday broke above the recent Dow trading range and took the index all the way to test key resistance around the 21,350 level. So what happened? Well, the Politburo meeting on the 9th of December sent strong policy easing signals, raising market hopes of a big bang stimulus package. The move in the monetary policy stance from prudent to appropriately loose and the introduction of extraordinary counter-cyclical adjustment beat expectations. In addition, the meeting pledged to implement more proactive fiscal policy, stabilize the housing and stock markets, and boost domestic demand from every aspect. The Central Economic Work Conference, likely to be held later this week, would be providing more details on what the Politburo called extraordinary counter-cyclical adjustment. This may include a large increase in government bond issuance, supported by regular PBOC purchases of central government bonds from the market. The new stimulus package is likely to be more focused on boosting consumption. Well, we believe that investors should have some exposure to benefit from the potential upside, while having a fallback option in case there were to be disappointments or other external macro challenges, such as renewed rhetorics from Trump. It is important for investors to use a barbell strategy in China with our buy views on non-financial high-dividend SOEs for income stability amidst the uncertainties, and the Hang Seng technology sector for valuation re-rating when more policy stimulus is rolled out. Companies in this sector also generate strong cash flows, which are used for share buybacks. This barbell approach would provide exposure to income stability along with higher beta gains when China unveils more stimulus. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and I wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.